All right, welcome everybody to the client support webinar for Wednesday, August 16th, 2023. Great to be here. All right, so let me know if you can hear me okay. Great turnout today, not so bad considering August is usually one where everybody takes a vacation, so it looks pretty good today. All right, audio, it looks a-okay, good. Okay, so let me go ahead and just run through my usual stuff here I gotta do, admin stuff. First thing is talk about the risks involved in trading. Like we always say, without those risks, there is no opportunity. So the two really go hand in hand. But we want you to be aware of the risks and how to protect yourself. First of all, always trade with money you can afford to risk, right? Second, know how to do trade size. I got a couple books on that can help you control what we call your quote unquote trade risk. And then finally, also check with your financial advisor before taking any trades or suggestions we talk about during not only this webinar, but any of our webinars, because we don't know what's suitable for you, they do. So make sure things are suitable on your side. All right, and then finally, past performance does not guarantee future performance, and also to make sure that you understand that we work in a realm of probabilities, so no guarantees. All right, so books. I'll have Jean put a link up in the chat area. I think she's here now for the books. Hello, Jean. All right, so actually, I guess I got to make you an organizer first, don't I? Okay. All right, see if you can do that. All right. Okay, there you go. All right, so you should be all set now. You're welcome. Any announcements you want to make?
No, just happy summer, everybody. Good to see you all here.
Okay, happy summer. All right, so these are the books. Really excited about my new book, The Art of Trading, second edition. That's coming out soon, and you can pre-order that as well right now. So definitely check that out. And then, of course, probably why many of you are here, you have our software, and some of you may own all of it. Some of you may own some of it, but you can always add on to it. So if you own the ART, you can always add the OWL or the PTF or the TLM or the ERI indicators or any of our scanners, as well as our risk control software too. All right, so let me just escape from here, all right, and go into some of the charts here. First thing I want to talk about here is, and if you have any questions, feel free to ask. All right, I want to talk a little bit more. I got some emails regarding the PTF. So the PTF is this indicator right here, and I have it on all three charts. And so it's this indicator that sits right under the OWL histogram. All right, so let's spend a little time talking about that. So I'm going to bring up for a moment the whiteboard here. And what the PTF does is, when markets have big moves either up or down, they get to a certain point where they get overdone. All right, they have excess amount of momentum. And usually what we found statistically is when that happens, yeah, you get a pullback for sure, okay, whether it's up or down. But if the momentum and the force of this, I guess what we'll call it the strength of the movement is fierce enough, we found a link between the probabilities of it returning and once again exceeding that place. And that's how the PTF was derived. That's the basis of the PTF indicator. So in a case like this, let's say the PTF was yellow, then all of a sudden it got to this price bar here, and it turned green. Likewise, all right, if it was here, I'll put it down here. Likewise, if it was here, it was yellow, and then it turned red. So what created the change was one of these price bars, and it will be very specific. So let's say it was this one, it would have to correlate something like this, or this one and correlate something like that. So on the big move up, if the force or the strength is strong enough to turn the PTF over here green, then statistically, that's working off code that I developed for that. that basically says statistically we have a 75% chance of the market at some point returning and taking that out. Now, that was something we were observed over testing. Okay, it was never really something we set out to do. It was something more that was observed, that when an indicator that we like to use hit that mark, that's what happened. So then we customized it to fit the statistics. So basically now it's yellow and green, okay? And so when it's yellow, it's neutral, but when it turns green or it turns red, that's when it has meaning, and that's when the 75% kicks in. So the idea is that, okay, it kind of gets to this point. It usually gets to a point where it's overbought. I don't really like that term, but we'll use it for this. So it gets overbought. And so what happens here, in other words, the strength really can't maintain itself, is probably a better way to say it. So you get some either big movement up at that point and then profit taking. So basically what happens is when this turns green, it's not unusual for the market to pull back. When this turns red, again, it's not unusual for the market to pull back off the bearish trend, right? But when this is green, what it's saying is that this pullback, all right, when it ends, the market should return and take out the high. And it does it 75% of the time. Likewise, if the pullback is to the bullish side, it's saying that 75% of the time, the low should again be taken out. And that's what the PTF does. Okay, so it's an indicator that is giving you an idea, all right, that whatever created it, whatever price bar created either a red or a green, that it's giving you a 75% probability the market shall return. Now, unfortunately, there's no way of knowing how much of a pullback you're going to get in either direction before it returns, okay? So it's just giving you a fact that it is going to, at some point in time, return. And it doesn't matter what time frame, okay? You could have this on a intraday chart. You could have this on an end of day chart, like a weekly or a daily, it doesn't matter, okay? All right, so that's kind of what that is all about. And of course, if you have any questions, ask away on that. So the reason why this is helpful is because, and let me just erase this here, is that if we look at markets, all right, let's say we scan for a green or red PTF. In this case, let's say we're scanning for a green one. Okay, so this is going to be green. So again, the bottom PTF indicator down here, let's say it turns from yellow here to green. Now, that means if we scan for this, and let's say we scan for this and we show up and we see some type of bullishness returning. So maybe a good thing to scan for would be a green owl, right? And a green PTF, and see if we can catch a movement off a pullback bottom. Many people ask me, what kind of scans do I like? This is a scan I like, using our scanners. All right, so if you have something like that, that's pretty cool, right? So if you have the Trendline Master, for example, you could actually set up the scans on that for a green owl and a green PTF. All right, and if you find one, when you look at the chart on those, if you find one that's just bouncing off the bottom, that's really good, because if you can put your stop down here and you can enter close to the bottom and it's showing a PTF target up here, then you might have a 2-to-1 risk to reward, right? So that makes the chart good. And it really doesn't matter what the Elliott wave count is here, because at this point, we're using a PTF target only. And so this is basically a scalp trade off the PTF indicator. So that's one possibility, right? Now, let's take a look at the same market. Let's say we do a scan again. and we're coming up here like this, same type of market, and it starts to pull back. This creates a green PTF, so we got green up there, all right? But if you look here, okay, let's say we take a look at this market. This would not be a good trade because A, we don't know if it's going to go down further, and even if it reversed here, all right, by the time you got in here, your risk to reward is not 2 to 1. So you actually need to wait for a more severe pullback to make that type of trade worthwhile, right? So you want to have this thing come down and then go in here where you can put your stop here and have a 2 to 1. In other words, the distance to the target, when I say 2 to 1, is twice as great as the distance from the possible stop area. Same thing on a downtrend. So that's a PTF scalp trade. Any questions on that? So take a look at this, okay? Take a look at this chart. So here's where we have a green one here, but we have yellow here. Now, yellow on the PTF, which is right here, okay? So when I say yellow, I'm looking at this indicator here, all right? When I'm saying green, I'm looking at this. This is the PTF. So this is the row for the PTF, right? So when it's yellow, it's neutral, and it really does not have a reading at that particular point. So it can be ignored. You can take a long or a short trade with a yellow PTF. So don't let a yellow PTF hinder whether you should be long or short. But if I have a green PTF here, okay, on the weekly, then if I'm trading the weekly chart, this time frame, I don't want to take any short trades, okay, only long trades, okay? So if we look at this and we're trying to get an early entry for a possible long trade, we still got a pretty severe owl red over here, but look, they're green here. There's no more red. We had one red here. There's no more red here, and there's green here. So this may be suitable for a possibility of a long trade. There's two things that would keep me out of this trade. One is we still have an active P pyramid here, so I'm not happy about that because I'm going against the pyramid on this time frame. So this time frame I couldn't trade really. This one's not so good. But let's check out the 60-minute. This one's a bit better. Look, I've got pyramids here. So I need to take a look and see where my target is on the 60 and if that's a viable trade. So maybe if we draw, if we draw some, let me go back to Ninja Trader since I was on that. So if we draw some fibs, retracements, this may be the target I'm shooting for. So if that's the case, if I'm going to trade a 60-minute, then I need to get in as early as I can and realize that this is a counter trend trade on the 1 minute, right? Because we're going against the trend. And also too, all right, we got a red out. So you have to base the trades off this here. Or if you don't like to trade that shorter time frame, just forget it. Don't trade it. Now, obviously, we've had 1, 2, 3, almost a fourth pyramid in a row. So if you went in now, okay, even if your stop was at the closest pyramid, you're very, very close to, I guess you got close to a 2 to 1, but it would have been better to have gotten in down here, right? So that's kind of important. All right, let me go back to the whiteboard for 1 minute. So one more condition you may see with the PTF is if you have a market that goes up, normally if that turns the PTF green and it pulls back and then goes back up above the high, if this turns yellow, what that is meaning is that, because it's turning neutral, is that it's making a new high, but the strength of the new high was not strong enough to keep the signal green. So it turns yellow. Now, that's good to know because a couple things. One is if my target, if I entered a trade, let's say here, my stop was here, my target was the top here, and it turns yellow, well, as soon as it turns yellow, you just exit the trade right then and there. Just exit it. However, okay, let's say it stays green and doesn't turn yellow. Well, in that case, start trailing your stops under each price bar until it turns yellow and then get out, okay? Same thing with a red one. So if you had a red one coming down here, like this, all right, turned it red, came back up here, and came back below the red, and it stayed red, didn't turn yellow, then trail your stops until it turns yellow, and then get out, because it's a scalp trade. So these are kind of fun trades. Now, what can go wrong with this? Well, the way you can get stopped out, even everything looking really good, let's say we get something like this, and we get some move up here, we have a green here, we get a move off here, and let's say we had something like the price bars up here before and things like that. So if you put your stop here, it's always possible we could get stopped out, and then the market rebounds and the PTF was right, but we got stopped out and didn't make any money. That's possible too. So stop loss placement becomes really important when doing this type of trade. And so sometimes what I do is if I've had one straight leg down and I don't see like an ABC correction, I may put my stop a little further under the last support area to give it a little bit more room, which means my trade size, I lower my trade size, okay? Does that make sense? They're kind of fun though, aren't they? All right, so let's see questions here. First question I got coming from you, Alexander, how are you? If the 5 minute is green and the 1 minute is red, okay, we don't have that here. Let's see if we can find that on another one. Nope. Because that happens actually quite a lot. Nope. Oh, by the way, you see where this turned from green to red? That's one of the 25% times it did not work. But it's telling you things are different. So now the red PTF voids out any of the possibilities of the green PTF. All right, let's keep going on here. Let me see if I can find something here. All right, if we wait long enough, we got two reds there. Okay, all right, I don't see it, so I'll bring an example of that offhand. So let me just bring the whiteboard back up. Let's put 1 minute here and 5 minute here. Okay, so let's say we had a move up here, okay, triggered a green, and it's kind of coming down here. So if you looked at the PTF at the bottom, it would have been, let's say, yellow here and turned green, okay? So it's green. However, on the 1 minute, we look, and this move down is amplified on the 1 minute, something like that. And let's say this one created a red PTF. All right, so what do you do? Okay, maybe it's moving up a little bit like this. So what do you do? All right, well, the red is on the shorter time frame, right? So you don't go long on the 5, okay, even though it's green. Because what this is saying is, Alexander, is it's saying that this move down here is not over yet. That maybe we'll retrace up here, and then it will have a 75% probability of making a new low. And hopefully when it does that, turns yellow. And as long as this stays green, even during the next low, then when it bounces off, then you'll have a yellow here, and you'll have a green here, and it's a go. Okay, so the shorter time frame PTF should happen before the longer time frame PTF. Does that make sense? It's a great question. Think about that. Let me see, Lewis, if you're here. Okay, good. Lewis is here. So Lewis, I know you purchased this indicator, so I want to make sure that this makes sense to you as well. Okay. Okay, good. Excellent. All right. And Alexander, I didn't hear back from you. Did this work out for you? Was that explanation? Because you asked the question. Okay, good. All right. Let's see what we got here. He's asking another question. If a PTF is still red, but the histogram is changing momentum. All right. So the histogram is not the PTF. The histogram is the owl. So the PTF trumps the histogram. So if you have a green, let's say you had a green owl over here. Let's say the owl histogram turned green here, but this was red. I still wouldn't go long because this is showing that this is just a temporary pullback that could create a green owl, but I'm not going to trade against the PTF, okay? Don't worry about the lines, just worry about the color, okay? Forget the lines. The lines just allow you to see the PTF information unfolding, but we really don't, the way we design the indicators to make it 3 colors, green, yellow, red. And that's really all you need to focus on. Don't overthink it. All right, I think I answered your second question where you said, if a PTF is still red, but the histogram, meaning the owl, is changing momentum, but then you said how, and that was all you said. I'm not sure what the question really was on that. TLM is a different animal. Okay, that's the trend line master. On the TLM, that's just drawing automatic trend lines. And when I enter a market in the beginning, chances are I'm not even using or looking at the trend line master, because if I get in early on a trend, for example, let's say we have a downtrend, okay? And you have a trend line, you have downtrend like this, and the trend line's drawn like this, all right? But then I get a move up, okay, here, but it may not have time to draw the trend line yet, because you kind of even for it to think about it, you have to have a higher high, right, before a trend line can draw. So if I'm entering in early, which I like to do, okay, then chances are the trend line won't have time to be bullish yet. So I don't use the trend line master for my initial entry most of the time. Now, the trend line master can be used. Let's say we get a pyramid here, the market moves up, I enter, okay, I put my stop up under the pyramid because it's a new high, and then I get another one pull back. We have a trend line here, and then another move up, and I'm thinking now about moving my stop. That's a must. But now I'm thinking about adding into the trend. That's when I usually check to make sure there's a trend in place by the trend line master, and I'm not in some type of sloppy market that is creating, new pyramids as the sloppy market forms. Because if this isn't, good enough to draw a trend line in, then, I don't want to get in there on an add in either. Okay, so I usually do scaling in or adding in when the trend line master is the same color. In this case, it would be green for bullish as the pyramid. Now, the other way to use the trend line master is, let's say let's say on this same example here, let me just erase this. Let's say on this same example, we have a situation where the market comes down, pulls back up. I don't get another pyramid, and it takes off on me a while, pulls back a little bit, okay, and then drops below the trend line. All right, you can use this as a scale out, just like a 1B or a 2B. This might be a 1B. Scale out there, or you could scale out using a trend line. Okay, so that's the kind of situation. All right, it's a good question. Hopefully that, that helps. I'm sure if you have it, a bunch of other people got it too. All right, so the trend line's a little different than the PTF. I use it in a little different way. That's why when I first enter a trade, I very rarely, especially if it's near a bottom, I very rarely think about the trend line, master at that point. Now, notice here, all right, we had prices exit the trend line here. You could have scaled out there. However, your stop was so close here, you wouldn't have done that. But then you had another. So the trend line master draws different trend lines depending on short-term, intermediate, and long-term on the trend. And you can turn these off on both TradeStation and here. So for example, I could go in here and remove it, and the lines disappear, but the indicator at the bottom tells me what it is. It's kind of cool. But the thing is that I like to have the trend lines usually on the chart I'm actually trading, because then if I want to use them for scaling out, I can use them then. Then you got to go back here and put them back in there. Okay, so under the trend line, you got the ribbon, and just the ribbon is at the bottom. The trend line master, just the TLM, that draws the lines, okay? Then you just refresh the chart, and the trend lines will balance, show up. There they are, okay? All right, so that's kind of how that works. All right, we only got a minute or two left, but I did want to cover that because I've been getting a lot of questions on that, and it's a great topic to discuss too. All right, I think I'm looking for anything else. I think that's it, okay? All right, so that's it for today. And this recording will be put in our private area as an unlisted video in YouTube. So remember, you have to go into the client hub portal to access the link to all our unlisted YouTube videos, but the recording we'll have in there by the end of the day today, okay? Probably a lot quicker than that. All right, listen, thank you so much. Boy, the gold is really selling off today. Look at that. All right, let's just take a quick look at the MES real quick too. That's going back down again too. Imagine all the equities are to follow. Take a look at the NASDAQ. So these are day trading timeframes. These are 1 minute, 15-second, and 5-minute charts on the far right. And this is what we use when we do our day trading room. Day trading room is fun. If you got the time to attend, it's a good time. And we just had our newest member join, Lewis. So great to have you there, Lewis. All right, well, that's it for today. Thank you, everybody, and we'll see you back here next Wednesday. Have a great week. Hope you all are enjoying summer. Ticking right by, right? We'll blink, it'll be Labor Day. So enjoy it and have a good one.